Good morning, guys. Today we'll be talking about the breakout strategy. Last video we talked about how to spot a real breakout. So now we'll be talking about how to enter into a breakout trade, like how to trade a breakout. We are coming closer to the end of our Bachelor of Forex program, and it has been a wonderful experience so far. And for this video and throughout the many videos, we'll be talking about what you all have been waiting to hear: entries, how to enter into a market, where to enter into a market, and your target. So right now, this is what we have. The first I'll be talking about today is the how to trade the breakout. So this is the breakout strategy. The entries, the stop loss will all be stated in this video. So these are the trades, these are the charts we used during when I was analyzing the breakout based on the weekly time frame on our former videos. As you can see, we still have the boxes. So for now, we'll be trying to explain, I'll be showing you how to trade this breakout strategy. Now, looking at this particular place, the first video we have here, this was our breakout bar, right? Good. This was our breakout bar. Then this is our second area of interest. This is our second area of interest. And this will be finally our third area of interest. This particular breakout here. We want to know why price breaks out and moves back up. How did it do it? So the first thing first, I want you to understand this. Whenever you spot a breakout from the main time frame, what we'll be using for this particular strategy is what? Our moving averages, which will serve as a key level area. Our moving averages, divergence. Remember I told you before any valid move happens, divergence occurs, but you have to spot the real area, the main time frame where the divergence is coming from. Then the last thing is what? Our time frame analysis. The time frame sequence. Now, this is the time frame sequence. Now, the first thing first, when you spot a breakout from your main time frame. Now, our main time frame here is a weekly time frame. And where is our breakout? Our breakout bar happens where? Here, this particular bar. Here. This particular bullish bar happens to be our breakout bar. So we want to check out. Let me make this. So we want to check out why. Okay. We want to check out why price obviously moved from here up to this place after the breakout. The area where you see the trend line, it's our area of trend where we want to enter the trade from, and the markup. These are the markup levels of the breakout. Now, the first thing, we spot our breakout from the weekly time frame. Now we go down to the weekly time frame. After the weekly time frame, the primary time frame of the weekly is the 4 hours. Now when you go back to the 4 hours, where is it? Good. Here we have it. When you go back to the 4 hours, remember our breakout happens where? Here. This was the close of the bar. You have the close of the bar up here. Good. You have the close of the bar up here. And this was where our breakout occurred. A breakout above the resistance field. Let me turn the close of the bar to a red and good. Now we go down to the primary time frame of the weekly time frame, which is the 4 hours. What are we looking for? Listen, we are looking for a retracement back in the what? In the primary time frame. We are looking for a retracement back to the what? The key level area. Retracement back to key level area, which is the moving average. the retracement to key level area, which is the moving average. Now we want to look at the retracement back to the 4 hours moving average. That is what you want to be looking out for. A retracement back to the 4-hour moving average, and this is it. This was where the breakout occurred. Yeah. Let me see when we have the close of this bar. All right, 12 and 03, 07. Good. Now at the opening of this particular bar, you can see it opened right at the touch of the moving averages. Now this is what our area of interest. Once price touches the moving averages, listing and listing, good. What you want to look out for now is this. You want to go down to your entry time frame. I will repeat myself. On your main time frame, you spot your breakout. On your primary time frame, rather, you spot your what? Your touch, just the touch to your what? Moving averages. You want, when price touches the moving averages, you want to enter the trade. But that is an aggressive entry. We are not going to be taking that. We are going to be considering the conservative one that will give us a minimal risk to reward ratio, a minimal risk and a maximal reward ratio. Now, we have the touch at the moving average level, which is at this particular zone. What next are we going to be looking out for? We will go down to our what? Our entry time frame, which is the 30 minutes. Which is the 30 minutes level. Alright, this is the 30 minutes level. Yeah. And we want to spot our what? Our divergence. Good. Now listen to what you are spotting out on the moving, on the entry level. You are looking for what? A divergence and a break of market structure. Of course, you all know what MS is. A break of market structure. So I will shrink this so we're able to see clearly. Now, price breaks out from this zone. Remember, breaks out from this zone here. Let me make it a square. Extend up to this level. Extend up to this level. Can you see? Now, it retraces back, forming the market structure. This. The drop went back up from another range. Now, our key market structure level happens to be where? Here. Our market structure level right now is where? Yeah, this particular level here. This is our key market structure level. It's our key market structure level. Yes. Our key market structure level. Now we want to check out for divergence. Let me pick the MACD. We want to check out for divergence on the 30 minutes time frame. We want to ensure that there is a divergence. If there's no divergence, stay out of it. Well, now you ask me, why will I stay out of it? You are staying out of it because when there is no divergence, it is simply telling you that what? There is still some strength from the opposing trend. For example, here we are looking to buy, but the sellers are the opposing trend. There are still some strength among the sellers, so we are still looking for a what? A correction of price. We are still looking for a what? A consolidation of price. Weakness. There's still weakness. There's still a tussle between the both of them. So we need a complete clear what? Fight, and that is why a complete clear winning rather, and that is why we need to see the divergence to tell you that something is about happening. The buyers are getting stronger, the sellers are not, and that is why you can see we don't have a divergence here. Although we have a break of the market structure around this level, but there was no divergence. And so what happened? Price kept on trending higher, and you can see, if you judge from this, if you notice, what do we have? We saw price making all these lows. See, you see the lows. They're still making so many lows, consolidating until we have the final what? Divergence here. Look at the divergence in price. This is a divergence here. This is a divergence. We have a divergence in price. This is a bullish continuation divergence. We have a divergence in price. And what happened? Price went higher. Remember, we have the break of the market structure. Price went higher. You can see. But if you ask me, I have not taught you continuation pattern of divergence. So I won't be taking this trade. Why? Because I still want to see a reversal style of divergence, not just a continuation divergence. And if you go back to your 4-hour chart, you will notice something that what? All these areas are still respecting the 4 hours. All these areas you are seeing here, they are still respecting the 4 hours level. They are still respecting the 4 hours level. They are still respecting the 4 hours level. Yeah. What are they respecting? They are still respecting the 4 hours level. That means price is still around the moving average, the 4 hours moving average. They are still respecting the 4 hours moving average. Now, looking at this particular area, we haven't, like I said, we haven't seen a reversal style of divergence, but instead what we are seeing is a bullish continuational divergence. Yes, we can go for it, but like I said, I prefer to see a pure reversal divergence. A pure reversal divergence. Now, what happened? We saw price moved, and what? We have it going back to the what? To the top around this level. We have it going back to the top around this level. Going back to the top around this level. You can see. So that is what you want to be seeing. You want to see your breakout on the main time frame. You want to go back to your primary time frame and wait for a touch of the moving average at the primary time frame. Then you want to go back to your entry time frame, look for a divergence, a break of market structure. Then you enter your buy. When you entering your buy, now if we happen to enter from this particular zone here, if we happen to enter from this particular zone here, this zone, of which there is no divergence here, this is our break of market structure. This is our break of market structure. Our buy will start from here. Now this is going to be 131 pips. 131 pips stop loss, and our take profit is over 122 pips. Now you can see it's very no, our entry will be around here, like I said, over 164 70 pips, and this is the stop loss, this is the reward. But taking it from where we spot the divergence, look at it, look at where we spot our divergence, and we take our entry from the break. Don't forget the break of the market structure, the break of the market structure, and which happens to be around here, this place. Let me make it wide. The break of the market structure, good, which happens to be around this place. Yeah, this was the break of the market structure. The price came back, nearly hit our stop loss, but what? It went back up. So whenever you are taking this trade, it is best for you to target a 1:1. And what are you targeting? You are targeting a reversal back to wherever price is coming from, or you are targeting the continual of the trend. In this particular case, we are targeting the continual of the what? The trend. And what happened when we got to this top? When we got to the top here, right here, when we have the top right here, we get to this particular top. Yes, let us analyze the top, because I've done that. Price did what? Showed us what the strategy we want to be seeing. And what is that? And what exactly is that? Yes, this is it. Price was forming a divergence even as it was advancing during our buy. And we have the divergence, we have the break in market structure. And what happened? We have the continuation of what? A sell trade. Now we are not looking at this. What we are looking at now is how to go into the sell trade, making use of the breakout strategy. Now right here, we know that the breakout is from the weekly time frame. We know that the main time frame is the weekly time frame. And so let me take this out. We are done with this area. We are done with this area. We are done with this area. All right. Now we know fully well that this is our the next values I'm looking at now. This particular area is where price consolidated, and this was where we have our breakout. This was the breakout bar. This particular bearish bar happens to be our breakout bar. Now we want to see what happened here. Now what is it? You go down to your 4-hour time frame, don't forget, which is our primary time frame. We want to spot the what? This is our box where the price breakouts during the week. Good, this is our breakout level. Yeah, this is it. Price break out from this zone, then immediately we have a reversal of trend. Now you see the reason why I say you should always wait for a break in market structure from the 30 minutes time frame. Yeah, we have what we call a breakout of the 4-hour moving average level, where we are supposed to focus our attention on. And so price went above. Now when you spot a scenario like this, listen good. When you spot a scenario like this, that when price touches the 4-hour moving average, on the normal we are supposed to go down to the 30 minutes time frame. We are supposed to go down to the 30 minutes time frame and spot our a divergence and a break in market structure level. Now are we seeing the divergence? There is no divergence here. That gave us a reversal. No divergence. Can you see? There is no divergence here. And again, there was never a break in the market structure level. There was never a break in the market structure level. This is the market structure level here. This particular area. There was never a break below this particular area. And price kept on going higher. If you look at it, when price kept on going higher, up, there was no break of market structure. There was no break of market structure. That brings me to the second phase. The second phase, that means the second style of entry using a breakout strategy. And what is that? Whenever you see a situation whereby, where are we looking at? Good. Whenever you see a situation whereby I guess I'm not taking the right angle. Okay, this is our area. This is the area we're looking at. But let me talk about this. This is the area we're looking at. Sorry. Let me still go back and talk about this. Now, wherever you see price refusing to do what? To touch, refusing to reverse from our 4-hour level of interest, what you are to take note of is this. Price is going to go back and touch the next higher time frame, which is the daily moving average levels, and this is it. It went up to this moving average levels. This moving average level, can you see? And we have the drop. But this is not where we are looking at. We are looking at this particular box. Sorry, we are looking at this particular box. Let me take out every box, and so everything will be clear. Good, we are looking at this particular box here. Yeah, this is our area of interest. Yeah, this is where we saw the breakout. Good, this is the breakout bar. So this is our area of interest. So what happened? You go down to the 4-hour moving average levels. You wait for price to reverse back to the 4. It's very, very important. Reverse back. Now this was where we have the touch. We have the touch here. Now you spotting the touch. What are you to do? You have to go down to the entry time frame and look for your what? You have to go down to your entry time frame and obviously look for your break in market structure and your divergence for you to continue selling into the trend. But what do we have here? We are having what? Do we have a divergence? Yes, we do have a divergence here. We do have a divergence here around this level. Yes, we do have a divergence, although it is flat. We do have a divergence for price to do what? To reverse back up. But what is it that we don't have that invalidates this setup? That is what? A break below the market structure. This is the market structure level here. Can you see it? We have this move up, this down, we have this up. So this is supposed to be our market structure level, and price did not break through it. Then it went higher. Now I said something that whenever price did not touch whenever price did not respect the reversal from the primary time frame, please listen to this attentively. Whenever price did not rest the reversal, the key level area of the primary time frame level, your next key level area should be the market structure level of the next time frame, which is daily. Now we want to put our area here and see why price started reversing from this place. Can you see that is closer to the moving average level of what? The daily, until it did what? It came back to touch the moving average level here. Can you see? 4 hours. Now since the 4 hour is no longer the area of concentration, the next area of concentration is now the daily, because we have a shift in price. The market makers have shifted price. They shifted price from the 4 hour time frame to the what? To the daily time frame. You need to be able to spot all this every day of your life. You need to be able to see all this every day of your life. The shift from the 4 hour time frame to the daily time frame, moving average levels. And what happened after that? What happened after that is this: you automatically have to understand that your area of entry has changed. It is no longer going to be 30 minutes time frame, but it is going to be 1 hour time frame. They changed their hands. You have to know that. Now we go down to the 1 hour time frame, and what are we looking for? We are looking for a break in the 1 hour time frame market structure, a divergence. Then we have the what? The continuous selling. Now let's check. This is it. This is it. Almost the same top. Almost the same top. And this happened to be our market structure region. Yeah. This happens to be our market structure region. And what happened? We have a close below it, and price drops. Price drops. Can you see? My entry will be this. Listen, a close below the market structure region of the 1 hour. Then my stop loss will be above here, 97 pips to target 198 pips. Now listen good. Some of you will say, why didn't I take my entry from here? Listen, at this particular point, there was no touch of the MA in the daily time frame. The touch came here instead, at this zone. This was where we have the touch. So where we have the touch. And what happened? We have the drop in price. We have the drop in price. Price drops, giving us our pips. Now the next example we want to take out now is this. The next example we want to take out is this. This is where the weekly again happens to be our main time frame. Yeah, we have a breakout from this particular weekly bar. We have a breakout from this particular weekly bar. We have an opposition bar. We have the breakout candle. This is the breakout candle. Good. Then we are positioned for a breakout trade. What are we looking for? Like I said, you go back down to your 4 hour time frame. Your 4 hour time frame. Sorry, I didn't mark the area. Go back down to your 4 hour time frame, which happens to be here. You go to your 4 hour time frame moving average level. You want to spot the breakout from that zone. Now this is our breakout bar. This is where price breaks out from. 0507. Good. This is the breakout bar. But look at it. What happened? It was so close to the moving average that what? It breaks below the moving average. Now when you see something like this, what are you going to expect? You are simply expecting this: a reversal back to the daily time frame. This is it. It touches the daily time frame moving average. Can you see? They change their hands. They change their hands in the style. They want to pick you out because you'll be expecting to go aggressive, or you wanted to take a trade from the 30 minutes time frame or whatsoever. They will change their style, change their hands, and take you back down to the time frame, the higher time frame, which is the daily, forcing you to have more patience and every other thing. Discipline yourself. But what happened? They came down to the daily time frame moving average structure level at the 1 hour time frame. So our focus has now what? Shift from the 4 hours to the daily. And if our daily is the main time frame, our now 1 hour is now going to be what? Our area of interest, which is going to be the entry area. Now what are we looking for? We are spotting our divergence. This is so clear. Can you see? We have the divergence, clear divergence. Then what are we looking for again? We need a break in market structure level. A break in market structure level. This is the break. And what do we have? We have 49 pips to target 127 pips, and what price still went higher. Price still went higher. Yeah, this is it. 127 pips, 152 pips, price still went higher. So this is what they do over and over and over and over again. Now let me take you back down to another chart, Great Britain JPY. Great Britain JPY. Good. Now this is a chart I actually told my friend about. I told him this is what is happening to Great Britain JPY, and yeah, he was able to confirm it. Now we have the breakout on the weekly time frame here. We have the breakout on the weekly time frame here. This was our breakout bar. This was our breakout bar. This is our breakout bar. Good. Now, like I said, we need a reversal back to the 4-hour level moving averages, and this is where we need our focus to be, the 4-hour level moving averages. Good. And what happened? Price exactly came down to our 4-hour moving average level. This is 12, 13. Okay, we have 11. Let's close at 10, 11, 12, 13, 14, 17. Good. This was where we have our breakout from. The breakout candle closed around here, and what happened? We have a move directly to our 4-hour level. Now, did they change their hand here? Let's check. Obviously they didn't, because they did not get to touch the daily moving averages. But what did they do actually here? They console price. They took them days, over 3 to 4 days. They held price at the 4-hour level, the 4-hour market structure level. And let's go down to the 30 minutes time frame and see if we're going to have a divergence and a break in the market structure. Do we have the divergence? No, we don't. We did not have the divergence here. I'm not trying to form anything. I don't want to. Do we have the divergence here? Do we have the divergence? No, obviously no. There is no divergence here. But we do have a break in market structure. So this is a no trade for me, and price went up. Price went up, and went up even without us. Even without us entering the trade. It's a gun trade. But let's look for another example on gold. Yeah, on gold. Now this is a change in what? There's a change in the market, the main time frame here. The main time frame here is daily time frame. They will have the main time frame as the daily time frame. And so if we have the daily time frame as the main time frame, our primary time frame will be the 1 hour. And so this is what we have our breakout. We have our breakout around here, this zone. We have our breakout around this zone. Sorry, someone just came to ask for something. In case you hear any voice at the background. Okay, so let's continue. This is our daily time frame. We have a close above our daily time frame level. We have a close above our daily time frame level. This is very, very simple. They do this over and over and over again. You just need to have the discipline and the patience to wait. Now this is our close in the daily time frame level. And what happened? We saw this. So we go down to the what? The 1 hour time frame, which is going to be our primary time frame when we have the daily as the main time frame. We go down to the 1 hour time frame, and yes, price did what? Price retraced back to the 1 hour time frame. Price retraced back to the 1 hour time frame. Good. Now we have a shift in what? In focus. And what did they do here right now? They changed their hand from the 1 hour to the 4 hours. Remember what I said? The style 2, the second style, that's what they did. They changed. This is 1 hour level, but they stepped it down to the 4 hour time frame. And from the 4 hour, We are no longer looking at the 15 minutes, we are now looking at the 30 minutes. What do we have? Do we have a divergence? Of course we do. We do. And we have a break in the market structure. A break in market structure. Let me see if I can load up my chart. We have a break in the market structure. And what happened? Remember our 172 pips stop loss, and we want to see where price go and how this price come to play, how price played out from this level. So this is our entry zone, this will be our stop loss region. Our stop loss region rather will be around here. Our stop loss region, our entry zone at a close above the market structure. We are not dulling that. A close above the market structure. Some of you will say the stop loss is too high. Yes, but we can refine the stop loss into a lower risk. We can. But that will be we taking a lot of what time, waiting patiently for the right time. So this is gold 30 minutes. I want the charts to load so we can see how we can see where price, what really happened after this, the aftermath of this particular setup. Okay. In our next video, I'll be actually showing you people how I actually reduce the risks whenever I am trading this particular setup in case the stop loss is too wide. So yeah, this is it. We have 172, 178 rather to 165. That's how far it has gone. But like I said, we can reduce the risk, and this setup is 100%, 100%. I can assure you, 100%. We are going back to the top. We are going back to the top. This is always going to be our first target. When it is a retracement trade, this is going to be our first target. Then the continuation of the trend. So guys, this is all how to have to understand about how to take trade using the breakout strategy. I hope you enjoyed the video and you see more to what there is in forex trading. It's very simple. You just have to take your time to master, to understand the core concept behind what pushes price and how price come to get to a particular level. So in the next video, we'll be talking more on how to take our trades, the entries. Remember I said that the entries. So thank you.